go ahead and get going. Looks like a good number of the registrants have joined. So we'll kick this off officially. So welcome to a webinar with TenantBase and SBANav. This is about, as it's titled here, outpacing your competition, the power of SBANav and this partnership we have in closing more deals, helping you get the most out of your pipeline with TenantBase, as well as deals you're doing off the platform. We recognize that that's a lot of your business. So on the call today, you have Joe Perry, founder and CEO of SBANav, myself, Mike Zay with TenantBase, and Austin Posler with TenantBase, who runs our sales team and handles all of our tenant handles all of our tenant qualification and processes supporting that. So I'm going to let Joe introduce himself momentarily, and Austin as well, as we get into their slide kind of discussion. But this is the crew, and we're excited to be sharing some information with you today. Okay, so basically, we're going to talk just very quickly on the tenant-based side. This is all about Joe and how he can help you, and we want this to be conversational. So if there are questions and things, hopefully that takes us in a good direction. But basically, we just want to make sure everyone understands how TenantBase acquires the tenants that we're working with, and kind of our position in the local and small business community. That'll be short. Let Joe take the reins with the SBANav intro and overview. Q&A hopefully takes us a long way here. And then, just as always, let's take action after the call, whether that's a follow-up with Austin and our team, myself, Joe, whatever it is. Let's get some support going to build your pipeline on and off of TenantBase. Okay, TenantBase, for those that use it, and I saw some new names that maybe are dabbling and getting started, which is great. But basically, the way to think about TenantBase is we're a digital extension of your marketing strategy, right? We exist in places that you typically don't operate. You're out hustling for relationship development, cold calling, whatever it is. We're out there aggregating tenants online. And we've done that for a long time now. And we do it through our own marketing strategies, as well as some strategic partnerships that basically put us front and center to get in front of these tenants that are searching explicitly for space, or they are doing things that would indicate that they're in the market for commercial real estate. And all of that is to be said that it's our job to get them on our platform, create what we call a search profile so we understand what they're looking for. And then, as you see going down from that prospect aggregating stage, trying to qualify, educate, and connect them with you as the broker. So these tenants that come through us are touching the commercial real estate world in one way, shape, or form. And I think that the reason this partnership kind of came together is because what that really means is a lot of the time it's a small business trying to solve an operational problem. And as part of that, financing comes into the picture very squarely. And so that's where Joe's been really helpful with our brokers, because some of these deals may take a long time for them to be ready to lease or purchase space because they have to get the financing component ready. But this is where it's coming from. It's very actionable. It's very high intent people in the market for space. The way that you're connecting with them through TenantBase, if you're using the platform, pretty straightforward. You're used to all these things from left to right. You can go on and review them, engage directly. We send them all out automatically as well. And then Austin and our team are qualifying and looking for the best opportunities to send out to brokers. But generally speaking, you're able to engage with tenants in a number of ways. And what we want is for Joe's relationship and for these opportunities to be highlighted and available regardless of kind of how it's handed over. So let's go forward here to Austin. And Austin, if you want to kind of give your intro and then just talk about what your team's seeing, and this is a good place for that.
Yeah, hello. If I haven't met you before, I'm Austin Posler. I've been with TenantBase for probably 10 years now and have worked in a lot of different capacities. But what we work on today with is me and the team. We interface and interact with all the leads that come through the website in some way, shape, or form. We handle all the initial discovery calls. If you see those extra notes on the deal, it was either written by me or someone on the team. But on those calls, we're going through things that are probably very relatable to your calls with your prospects. What's your real estate requirements and needs? How's your company structured? Are you small business, international? Understanding the decision-making hierarchy of these businesses, whether you're the owner or directors, whatever the case is. But when applicable, we're looking for these opportunities to start introducing SBANav into the discourse because of all the things Mike mentioned. There's a lot of opportunity here. So we'll ask questions like, have you ever considered purchasing a building? And if so, do you understand the steps you'd have to take to figure out if that's even possible? Same goes for people who are starting businesses fresh from scratch. How are you financing that? Because there's obviously opportunities to get operating capital that are available to people starting a business. And the SBA is a great resource for that. So we want to make sure that they're aware of it as we hand it off to our partner brokers. So obviously, the cleanest would be they've already got everything buttoned up, but this is an ongoing conversation. So for you, when you see a tenant-based lead, especially if we've talked to them before and it's a small business, there's a pretty good chance we've already introduced the concept of working with the SBA to that tenant. So it should be a little bit warmer, a little bit easier to have that conversation yourself. Yeah, and those are the basics.
Awesome. And one of the things we're working on as we get deeper with Joe is one, we're wanting to introduce brokers directly to him, and he's had some really great meetings and discussions with some of our partners. And then two is as we introduce tenants in every way, you know, the manual, the prospecting automatically, whatever it is, trying to make sure that we're highlighting to you as the broker, hey, this person indicated they're interested in learning about financing options for their business, or it was a need. It's part of the process. So you're kind of aware of that, and maybe you can lean on this relationship a little bit more. So now enough preamble. We'll get to the show here. We'll let Joe take the reins and talk to you about his really unbelievable and unique background and his process and how he works in this capacity. It really is amazing what he's able to do as a partner. So Joe, without further ado, we'll let you go for it here.
Thanks very much, Mike and Austin. If you want to skip to the next slide, well, we do get shit done, but let's skip to the next slide. So my introduction is Mike just mentioned, I, in 1988, started a Chicago-based commercial real estate brokerage firm. So we understand your job from an interesting perspective. We're not lenders. We're brokers. We're used to eating what we kill. We're used to the thrill of victory and the agony of defeat. Those are closings and failures. We're all familiar with that process all too well. But as we went through credit cycles in the last 37 years of my business, of my experience in the business, we realized that we needed to add some other elements to our business model, and that was really advisory services. So back in the early 90s, we got pretty active in securing SBA loans for not just some of our clients and prospects, but for peers and other businesses. And in about 3 years ago, I liquidated a large portfolio of development assets that we had, and I had to look for something to do to keep me busy. And we decided to expand this SBA advisory services business into something that could create some efficiency on the borrower side, and provide a better foundation for the sourcing of SBA loans. You know, there are a lot of there's a lot of information, there's a lot of opinions and myths about SBA loans. They're too complicated. They take forever. All kinds of bad reputation. And a lot of that is well-deserved. If you're working with the wrong bank or the wrong shepherd in getting you through that process, there's often a lot of rabbit holes, and those reputations are sometimes well-deserved, but it doesn't have to be that way. If you want to skip to the next slide, Mike. So as we mentioned, as anybody on this call would recognize, you know, in the commercial real estate brokerage business, there are some people that are transactional, but I've found over the last 38 years of my experience in it that the best and most durable and prudent practitioners are those that work on a relationship basis. And the best way to expand a relationship with the prospect is to be able to provide more assets to them in getting their solution resolved and getting to a closing table, which pays us. So it's very important that we look at other elements beyond the transactional, find the property, or order a title policy or commitment, you order a phase 1 environmental and get it closed. There's so many other steps you can take to help build a stronger relationship with your clients and attract new clients because of the reputation that you'll build as a relationship builder. You know, brokers, in my opinion, never got the same respect as a CPA or as an attorney. And you should, and we deserve it. Those that invest in the relationship model should get that same kind of respect that their client's attorney or CPA gets. And you can, and we're here to add some tools to help you do that. You can slide to the next one. So yeah, that's part of the toolbox that successful commercial real estate brokers have, is other assets that make them stand out and differentiate from the competition. SBANav and our services can be a sledgehammer in that toolbox. Mike, you want to slide forward? I just want to talk a little bit about how SBA financing works and the benefits of SBA financing. And this is the most important thing that we're going to talk about today. We're all familiar with conventional commercial real estate financing. If there's real estate collateral involved, the maximum leverage is usually going to be 70%, maybe even 65%, which leaves a large equity gap for that borrower. Sometimes they need to bring in other investors. Sometimes they need to leverage it with other sources of debt that may be very expensive, home equity loans, credit card financing, things like that. With a non-real estate collateralized loan, when you go to a traditional commercial bank and they're just getting a UCC against business assets, the most we're going to find these days is 50% leverage and a 5 to 7 year term. With the SBA, both of those limitations are resolved, because if we have real estate as part of the collateral in an SBA loan, we can get up to 90% of the total project cost, loan to cost, and we can include in that uses of funds that traditional commercial banks would not ordinarily allow you to use, like FF&E, tenant improvements, working capital, moving costs. There's a lot of buckets we can fill with uses of funds that traditional banks will not let you use. So that's a huge advantage of SBA financing. Again, without the real estate collateral, same thing, we can get up to 90% of the total project cost, and they don't have real estate collateral as a backup for that. No bank is going to get close to that, but we can. And again, we can include FF&E, tenant improvements, working capital, just about anything you can think of, third-party consultants and advisors. We can include those either as a use of funds, or we could use them as part of your equity stack. If you paid for a lot, or if your client has paid for a lot of those things and can show that they've made that investment, they could apply that towards equity. Mike, you want to slide forward? So there are, what I want you to just realize here is there are really just two types of SBA loans. The 7A loan program, which is about 95% of the SBA loans that are closed annually, is for real estate and enterprise loans where there's no real estate collateral. If there's no real estate collateral, we're going to be looking at a 10-year amortization. If there's real estate collateral, we're going to be looking at a 25-year amortization. On a 7A loan, an SBA preferred lender makes the loan, and the SBA provides a guarantee behind that to encourage them to increase that leverage and make loans to opportunities that they would ordinarily say no to. That would be a senior position on either real estate or real estate and a UCC on the business assets. On all real estate SBA loans, personal guarantees by the borrower are required. The 504 loan program is for real estate only, and it is a little different, where a local commercial bank, or we can source an SBA-friendly commercial bank, provides a 50% leverage loan in the first position. The SBA makes a separate junior loan subordinated to that for 40%, and the borrower comes in with the 10%. In both of these instances, the maximum amount available to any borrower is $5 million in aggregate. but you could have multiple loans and multiple enterprises to get to that 5 million. Want to slide forward? So here's how we work with brokers. Here's the whole intention of our webinar today. The broker is usually working with a prospect to either buy or lease real estate, and may or may not be paying attention to some of the other concerns that that prospect has. Do they have financing in place? And a lot of deals, as I'm sure all of you folks know, die because they can't secure financing. We work directly with the prospect as part of your team and as a partner of yours on initial pre-application to get them a term sheet so that they know that they can qualify for the objective that they're working with for you. Actually, we can help you qualify that buyer or tenant by looking at their pre-application to make sure you're not wasting your time either with a dead end. And then once we pre-qualify them, we shepherd that prospect through the entire process, from that initial pre-application for qualification through a full application, which is very cumbersome ordinarily, but in 60 days, we'll be launching an AI and highly tech advanced process for that application process, which will take a lot of the burden off the borrower and make it much more efficient. We then provide a credit memo, which is really a full scrub of the borrower's request. We will look at their historical financials, their tax returns, their projections, their personal financial statement, the uses of funds or the project budget. And we will write about a 26-page memo that we give to the bank that ordinarily the bank would write later, but we give them to that earlier during that application process so we can accelerate the SBA process on the bank side as well. We do that with a lot of AI and some hand-holding, because while we believe in the technology that's being deployed in industries like ours, we believe that the hand-holding, the personal touch, the forecast of a pothole in the road, the experience of somebody like me or somebody on my team that can figure out a way to get around that pothole or avoid it altogether is very important. So we never lose that hand-holding with your prospect, and we keep you in the loop the entire time as part of the team. We're an extension of you. We do that from the initial pre-application through our underwriting, through the bank's underwriting, all the way to closing. And if there are multiple draws in the loan request for new construction or whatever the case may be where there are multiple draws, we stay involved in that to make sure that's running smoothly at the bank. We have about 130 banks that we work with through the SBA Preferred Lender Program. But really, when I distill that down, there's about a half dozen that we know what their appetite is. We know what they can do, what they don't like to do, what they're efficient at, what they suck at. And we make some of those, we steer those prospects to the best solution for what they need for their particular challenge. The SBA loans are pretty much a commodity. The loan documents are all the same. The terms and conditions are all the same. There can be differences in interest rates, but most banks follow lockstep with what interest rates are. Interest rates today are generally 2 over prime. So we're looking at, in the low 9s right now with a forecast for some compression in that in the next 18 to 24 months, as we see the Fed likely to compress that if we don't see a boom in inflation. Those are adjusted quarterly. Those are adjustable loans. They're adjusted quarterly. We can lock rates in, but we don't recommend doing that now for obvious reasons. But we advise and shepherd, like I say, that prospect through that whole process so that they can understand and make their own decisions on certain things like locking a rate or not. We get paid at closing by the bank. We don't cost you anything. We don't cost your prospect anything. We provide a ton of efficiency and expertise to the SBA loan process. So we think we differentiate from other brokers through our $1 billion of experience that we've got, and that credit memo and that business plan deck. I didn't mention that. We also build a business plan deck, about an 8-page deck, bank ready, with the top line information that a bank's going to have to review to do a sniff test on whether the prospect is eligible for an SBA loan. We do all that for free, and we do that on the front end. Mike, you want to slide?
I think we nailed it. So
That's it.
we
Yeah.
got some good questions here. Okay,
Yeah, so
finish
that's
up.
basically it. What we look to do is encourage relationship building with the brokerage community, because you guys understand the business. I understand the brokerage business, so I've got a unique perspective in knowing what you need in order to get to a closing table. Ultimately, it's to get to a closing table to keep us fed and well fed. We understand that from a unique perspective, not as a lender, because we are not a lender. We're an advisor in the lending process. And I can tell your prospect a lot of things that a lender cannot do. So if they go straight to Huntington and they're sitting with the loan officer there, first of all, they're going to end up calling me, because Huntington never closes deals. I can assure you that. But they go down a rabbit hole, and that loan officer is not going to give them some advice, because he's not allowed to, that I can as an advisor, like how to avoid a second mortgage on your client's primary residence or any investment real estate. If it's a non-real estate collateralized loan, there's ways to get around having to provide a second or best position mortgage on personal real estate. No lender is going to tell you that, but I will. And we'll do it early enough to be able to make sure that doesn't become a problem when it happens a lot in my industry. When the wife finds out that the husband has pledged a second mortgage on the house or the vacation home, and that deal just dies. And then you guys and I in our industries have spent a lot of time and a lot of energy and wasted a lot of our bandwidth on something that died on the vine. We can forecast that earlier and make sure deals that can close do close. So with that being said, I can open it up to any questions about the process or how we do it.
Yeah, got some good ones here. So first, the first ones kind of go together. So basically, Joe, like the benefits of working together with you, you kind of just talked about it. Deals fall apart for a lot of reasons, both real estate deals and financing. And have you seen your involvement, even when your involvement doesn't materialize in a loan, being helpful to brokers with the tenant in consummating a transaction or getting ahead of a problem like you just described?
Every day. I mean, that's really what we end up doing, is forecasting, troubleshooting, and then finding a way to fix a challenge.
Yeah.
That's what we do. It's triage.
That makes a ton of sense. So kind of an admin question, in the line of your process, is there a pre-approval type letter that you're creating? Is that the memo and business deck, or are you providing an approval letter of any kind?
No, it's a little different from the residential real estate industry, where they could look at the person's personal credit and financial balance sheet and things of that nature and give a pre-approval letter. Mm-hmm. Because there are other moving parts, like what is the address of the property? What are the uses of funds, which would be unique for each property? We can't do that too early. We can do it within about 5 to 7 days after a pre-application approval. Okay. And the submission of an application, an abbreviated application. Then I can get a term sheet from a lender that will give you some comfort to be able to go out and put your foot on the gas. The term sheet then goes into formal underwriting, and that takes 2 to 3 weeks. And then you get a commitment letter, and then we order third-party reports, if it's real estate, appraisals, phase 1 environmentals, things of that nature, and then we move to closing. That gestation period on either a real estate or a non-real estate loan is generally, if the borrower is aggregating their data and getting it to us efficiently, we can get it closed in usually 60 to 75 days from the moment of application.
Love it. Got it. Okay, great. So a couple quick ones here. I know the answer, but for everyone's benefit, do you work with tenants looking to lease space as well as people buying buildings?
Absolutely. Probably more non-real estate or leasing space. The collateral on that is a UCC against the business assets. And we could provide that. We love franchisees that have proven models, and we could look at historical financials and that business model that helps us build the whole pitch to the bank. But yes, we do both, and probably more non-real estate collateralized loans.
Perfect. Okay. So that'd be the leasing side doing as
Yep.
much. Okay, great. And the minimum loan size someone should send your way with a tenant requirement they're working on, ballpark.
There really isn't a minimum. We stopped paying some attention and focus under 250.
Mhm.
Our sweet spot is probably 750 to millions, million and a half. But I'm glad you brought up that question, because if there is a loan that's under $500,000 and it's an existing business, not a startup, and they've been reasonably profitable and they have a decent credit score, 660, I think is the low threshold on this program, then we can do what we call an SBA Express loan. And that is underwritten and closed in 14 to 21 days. But it has to be an existing business that is stabilized.
And it's up to 500K?
Up to 500K.
Okay.
And we've got a process for that. When that application comes in, we scrub it quickly and we give it to our partner bank that excels in that. It's the largest SBA lender in the country. And they let us know 14 days later or less, we closed.
Awesome. Okay, that's great. And so similar question on the tenant side, do they have to have been in business for at least 2 years for an SBA loan? Or is it kind of open-ended on the business?
No. So in order to qualify for that express loan program, yes, you do.
Okay.
2 years. But on many loans, they're startups. And again, try to get a loan from a bank and a startup. You won't get much. They'll let you have a sucker on the way out off the teller stand. But startups are one of the reasons why SBA is differentiated from traditional commercial lending. Is we can do startups as long as we have 3 years of financial projections that are believable and a business plan. We can help write that business plan. We can help with projections.
Okay.
I will say that at a certain point with the borrower, if it becomes really cumbersome, sometimes we will talk to them about an additional fee, but that's very rare and that's up front.
Okay.
If we're building the whole model, we may charge for that, but I got to learn to do that better, actually.
Yeah, that's the broker in you. You work for free for a while, right?
Yeah.
Okay, one and then kind of a general one that I think is great to end on. So does the SBA work on land acquisition if there's a plan to construct an industrial building along with it? Would that be a deal that would work?
Very much. We look at the entire project cost and figure out how the SBA tranche would work in that stack. But ultimately, if they're going to make the loan on the land, they're going to take a first position on the building.
Okay.
So it would be a construction loan.
Okay. And whoever asked that, if that didn't answer your question, ping us back in the chat. Make sure we got that.
And before we end on this question, I just want to clarify with Joe, if someone comes to you and says, I don't know how much money I could qualify for, are you able to put them through a process to at least tell them?
Yeah, there's a method for that. And I think everybody will understand this. We're going to look at their personal balance sheet, and we're going to figure out what their liquidity is, which is one component of sizing a loan. Generally, we need 10% down. The SBA or most lenders would like to see at least another 5% in post-closing liquidity for the borrower, so that they know that the borrower's not choked with the down payment and is concerned about their financial health outside the business. Now, to that end, we can use seller financing. We can use outside investors for equity, but that borrower is still going to have to sign the personal guarantee. And there's lots of methods for obtaining and stacking that equity portion if they're a little weak on the liquidity portion. But if we're quickly sizing something, we can look at the liquidity available by the borrower or other sources. And then the SBA uses a 1.2 debt service coverage. So I'd have to look at, we'd have to have some kind of data to plug into that algebra equation, whether it's EBITDA, gross revenue and operating expenses, whatever we can look at to help size the loan based on the amount of revenue available to cover debt service, 120%.
Got it.
Yep. Okay, good. Very good to understand.
So we had one more come in before the last question. So once a broker introduces you, Joe, to the borrower, to the tenant, do they get access throughout the process to kind of the loan officer? The question is to be able to ask them questions about contingency dates for the purchase agreement, anything else like that, or is that all through you? How does that work?
That's through, we try to do it as much through us as we can, because we're more attuned, more responsive, and we'll pay more attention to you. Once it goes to the loan officer, it's up to that bank to communicate with that broker. But we make certain that that broker is involved in any of the conversations that they want to be.
Okay.
And as we're building and finalizing our technology, there will be portals where that broker could check in and check the status of that loan.
Yeah.
Or shoot us an email. And, again, while we're embedding and investing in a lot of technology and agentic AI and all that great stuff that everybody says they're doing now, and it's great.
Yeah.
We believe the human touch is still essential, and we're not going to lose it at SBANav.
Well, you just stole my little punchline. I was going to say one of the compelling things when I got introduced to Joe, and we got to know each other because my business partner had an unrelated transaction at TenantBase that they were working on, and they got introduced. But Joe really embodies this win with service mentality, but he's also investing heavily in technology behind the background, behind the scene, to make his process and his team more effective, to enhance the service. And that's exactly what we've been trying to do at TenantBase for over a decade. So it's awesome to see in the SBA world as well that it's an opportunity. So
well, I don't want to offend anybody, Mike, as a follow up to that, but you just said we get stuff done. I have an old card that we use on occasion here. I'm going to hold up to the screen, but it really does tell our attitude, and I hope you guys will all appreciate it. But I don't know if you can see it, but at the top it says, "I get shit done." It's only taking a picture of me, but it says, "I get shit done," and I can assure you, we do get shit done, because I've got a family that has a lifestyle that I've become accustomed to, that I got to make sure it's fed really well. You guys all understand that. Before we go, I just see one name on here that I recognize. I want to see if it's my same old friend. Is Frank Marmo. Frank, if that's you and you and I go way back, reach out to me. I'd love to catch up.
It is. He mentioned he knew you. Yeah.
Okay.
Two more quick ones, and the last one's the good one to end on for everybody. So the AI stuff, when do you anticipate having that woven into your process generally?
We will have a full launch by May 1st.
Awesome.
It'll be online and ready to go by May 1st. Right now, you can simply direct your customers to either www.SBANav.com, and there's a portal there for the pre-application. You can email me or call me. All of my information is on our website, SBANav.com, and we can set up a call to walk you and your prospect through the process and sort of kickstart it. Or you can go through TenantBase. All of those portals go to the same place. They come to us, and we jump on it.
Awesome. All right. So this was a good question, I think, to kind of close up on. So why would someone use SBANav instead of a local community bank or the bank they've already done business with in the past? Why bring another party into the equation?
Well, if they've got a relationship with a community bank that is a preferred SBA lender, that means they've been approved to do SBA loans without outside SBA approval. And if they're really proficient and really good and you have a great relationship, use them. But what I'm here to tell you is there's a ton of rabbit holes. Man, Easter's coming. There are rabbit holes all over in the SBA world, and that's what creates a lot of the bad reputation about SBA lending. The reason you'd call me is because I don't cost a thing, and I can tell you little secrets in that application process and getting that loan done that your lender can't, or that prospect's lender can't. They can't because they work for the bank. For instance, you have a loan coming up, or you have a loan proposal on the table. You don't have real estate for collateral to pledge. Well, they're automatically going to put a second mortgage on your home, unless you have less than 15% equity in that home. Our advice is go get a HELOC temporarily through the application process, get that leveraged up so that you don't have to put a second mortgage on your home. The SBA loan is weaker with that, but they waive that requirement if that equity is not available. And we have sources for HELOCs that can park that for a minute until application's done. No lenders, your community banker is never going to tell you that. He can't. I can't. That's what we do. We navigate SBANav. We navigate around the potholes that you don't know exist.
Yeah. That's great. No, it makes tons of sense. And I think for commercial real estate brokers that work with tenants and in tenant rep capacity, that definitely resonates. So,
And we're free. And we're free to the borrower and to the broker.
Yep.
We got to feel it's really got a good chance of closing, or else or else we wasted our time, and we don't want to do that.
Yeah, and that's also just another set of eyes on the financial standing of the business and the tenant.
Exactly. Yep.
Well, great. Well, this is I really enjoyed this. I hope everyone else did. Another resource for you as a broker in your path trying to get deals done. Hopefully, it was insightful. We appreciate everyone's time. There were a few questions about will we make this available. The answer is yes. Bear with us on getting that out. It'll be recorded as well as the slide deck we can share. So,
and by the way, I have another audio, little couple, 3 or 4 minute, a different presentation tailored towards commercial real estate brokers. Anybody wants it, shoot me an email. I'll send you that alternative version of this.
Perfect. And as a key takeaway, I would highly recommend spend some time if this is of interest to you. If you think it could benefit your business, as with anything, build a relationship. Joe wants to talk to you one-on-one. We want that to happen. You never know when this could help save a deal that makes your quarter, your year, or maybe your decade. So hopefully this has been helpful, and we appreciate everyone's time, and we'll end it there. Thanks again.
Thanks, everybody.
Take care.
Bye
Thank
now.
you.